Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to be talking about the Supertrend moving average strategy, which is a powerful combination of two reliable indicators that can significantly improve your trading accuracy. If you've ever struggled with false signals or found yourself entering trades too early or too late, this strategy is exactly what you need. You will learn precisely how the super trend and moving averages work together to clearly identify market trends, pinpoint optimal entry and exit points, and maximize your profitability in the Forex market. So make sure you watch until the end because you will also discover common mistakes traders make with this strategy and how you can avoid them to consistently achieve better trading results. So without wasting any much of your time, let's get started. This is the trading view trading platform, and we are on Euro USD on the 1 hour time frame. Before we get into the charts, let's quickly explain the indicators involved. The super trend indicator is a trend following tool that appears directly on your trading chart as a single line, just like we have here. This is the super trend indicator. Now it uses two primary inputs, the average true range ATR, which measures market volatility, and the multiplier, and it uses a multiplier that adjusts the sensitivity of the indicator. You can set the ATR length and you can also set the multiplier in the settings. So when prices are above the super trend, the line turns green. When prices are above the super trend line, just like we have here, starting here, the super trend line turns green, as you can see, and this means that we are in an uptrend. Conversely, when prices fall below it, the line turns red, signaling that we are in a downtrend, just like we have here, just like we have here, also here. Okay. By adjusting the ATR period and multiplier, you can control how closely the super trend follows price movements. So it's a very vital indicator which can be used in the market. Now I'm going to add the moving average. The next indicator is the moving average. So just quickly add the moving average. Add the moving average exponential. Now, moving averages, on the other hand, smooth out price fluctuations to help you identify the overall trend direction in the market. Now, this is the moving average on our charts. So there are two main types used in this strategy. We have the exponential moving averages, which is the EMA, which is on my chart, and the simple moving average. The EMA reacts quickly to recent price changes because it gives more weight to recent data points. The SMA considers all price data equally, providing smoother but slightly delayed signals. In this strategy specifically, traders often combine a shorter term EMA like a 10-period EMA, which I'm just going to add, a 10-period EMA with a longer term SMA. So add the SMA and longer term SMA like the 20 period. Have the 20 period SMA, and I'm going to use the red color for the SMA. Right. Now you can see it's clear. When the shorter EMA crosses above the longer SMA, it indicates a bullish momentum and potential buying opportunities. Conversely, when it crosses below, it signals bearish momentum. So by combining, as you can see, it's clear on the charts. This is bearish momentum, this is bullish momentum. Avoid trading with this in ranging markets like this one, as price can keep going up and down without giving a clear buy or sell signal. So you only use it in trending markets like this one. You have the crossover here, pick a top here after break of structure to the upside, have another crossover here, and so it keeps going, and not in ranging markets like this one. This is a ranging market and you have a lot of false signals. So by combining these two indicators, the super trend for trend direction and the moving average for confirmation, you create a robust trading strategy. So let me quickly delete all of these drawings and add our super trend back to the charts. So this, we now have our super trend on the charts again. And if I can make these lines a bit thicker, right, it's okay. So let's quickly hop onto the charts. Let's quickly discover how we can trade with this strategy. The first step is setting up your chart. Start by adding the necessary indicators, just like I've showed you, to your trading chart. For this strategy, you need the super trend indicator and the moving averages only. Now the next step is identifying the trend. Now the super trend indicator is your primary tool in this strategy for determining market direction. When the price is above the green super trend line, it signals an uptrend. Conversely, when the price falls below the red super trend line, it indicates a downtrend. And you can see that we are in an uptrend here, and we just have a downtrend forming around here right now. So talk about that later. So imagine a scenario where the price crosses above the green super trend line. This indicates that buyers are in control, just like we have here. And after confirming the trend that yes, we are bullish, remember, we should see price above the super trend line, which we have seen right here. And the next step is confirming signals with moving averages. Now, once you've identified the trend direction using Supertrend, confirm your trade setups with moving averages. The crossover of moving averages acts as an additional layer of confirmation. For buy signals, just like we are expecting here, the 10-day EMA crosses above the 20-day SMA, while the Supertrend line is green. And that we have here. We have that here exactly. We have the crossover happening here. You can see the crossover happening here, and we can see price above the super trend line, which is green in color. And at the same time, we just had this pullback. We just had this pullback into that gap, which is an added confirmation for price action. You can see there's a gap here, and price gave us this pullback. Had this push after the crossover, and price being above the super trend line, we had this push, then a pullback to fill in that gap, and the push to the upside. Also, you have your engulfing, bullish engulfing candlestick pattern, and all of these are just supporting our bullish bias in this setup. So just place our buy entries with our stop losses below that low, and our take profits all the way to significant resistance levels like this one. Or we could just target a 1:2 fixed risk reward ratio, which we can see, and this is how I've been able to take part in this trade. You can also use the moving averages and the super trend line as your trailing stop. Use it to trail your stop loss all the way up, and that's exactly how you can use this to trade. Let's look for a bearish example. We have a bearish example forming here already. This is in real time. We had the crossover here, which is the confirmation, and we just had price going below the super trend line. This shows that we might be overbought here at the moment, which is why this is happening. Let's just quickly add the RSI to confirm, and the RSI shows us lower levels, so it won't be advisable to actually take this trade because price is closer to the oversold level than it is to the overbought, which should signal a sell trade. So it's just wise to wait and watch as this turns out. But if you decide to take a sell trade from here, as we've seen our combination, our strategy already forming, and we have our criteria, if you decide to take a sell trade, it should be for the short term and not for the long term. Your take profit levels should be in areas like this, your significant and nearby support levels like that one, which your stop loss above that high. This is not a financial advice as usual. Now this, as you can see, is also wise to add the RSI to help us confirm our trades. As you can see, the time we had this, we had price just crossing above the 50 level and using it as a retest before we had the bounce to the upside. That's why we took this trade, and this trade was a valid one. Let's quickly look for a sell trade example. Let's quickly look for a sell trade example, and we can see one here. So price is obviously bearish, have a bearish trend. So we are expecting price to continue its downtrend to break structure here. And now we have the cross happening here, and at the same time we also have price going below the super trend line and price turning red. And so we could just look to take our sell trade at the opening of the next candle after our confirmations. Stop loss above that high with our take profits all the way down, and we had a 1 is to 2.11 risk to reward ratio. That's how we're able to take part in this trade. It's a very straightforward strategy. It's not too difficult. You just need to practice. So different market conditions require different settings for indicators. So it's always wise to optimize your settings. Test various ATR lengths in the super trend and multipliers for the super trend indicator, as well as different periods for moving averages. I just use the 10 period and 20 period here. You can change it to find what works best for you and for your chosen asset or time frame. So this strategy combines simplicity with reliability, leveraging two trusted indicators. So by following these steps carefully, you can make informed trading decisions while minimizing risks associated with false signals or sudden market reversals. Alright traders, you've come to the end of today's video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.